topic for so many people. And it is going to be one of the largest, checks that we're going to get monthly once we get to retirement. So my job at Allianz is my title is technically a retirement consultant. So I go around my territory, which is Minnesota and Iowa, working with financial advisors to help them and their clients in retirement planning type of situations. And Social Security, since it's such a big topic and it's retirement income, we spend a lot of time doing these types of sessions, just educating, clients and retirees as to what is the best way to maximize their Social Security benefit. So to start things off, I got a little story for you. Does the name Ida Mae Fuller ring a bell to anybody at all? Joe, you cannot answer. Ida Mae Fuller. She has to be one of the luckiest human beings to ever live in the last 100 years. She was a legal secretary back in 1937, and she was technically the first person that received a monthly check from Social Security. Okay, so back in 1937, when they started Social Security, people would pay in, every single check, there'd be a little bit of your check that would get paid into Social Security. And then at some point in time when you retire, you're going to start collecting a check. From 1937 until November of 39, Ida Mae Fuller paid in a grand total of $24.75 into Social Security over those 3 years. She then retired, and she got her first check from Social Security in January of 1940. Her first monthly check that she got, $22.54. So think about that. 3 years, she paid in $24, and her first check, she basically got all of that out in one monthly check. Okay? Because back then in the 30s, life expectancy for most people was about age 65. And that's what the full retirement age was back then, was 65. So Social Security thought that she was only going to live for a couple of years. They wouldn't have to pay out that much, in benefits. Well, the thing about Ida Mae Fuller is then she went on to the good old age of 100. She collected just shy of $23,000 out of Social Security on a $24 investment. That's a pretty good dang return on investment, if you ask me, to get 23 grand off 24 bucks. That is just awesome. I mean, that's what Social Security really comes down to, is life expectancy. That is a big part of the discussion, right? And that's an educated guess. We don't know what our expiration date is, unfortunately. And if we did know what that was, this retirement planning thing would just be a piece of cake, because we spend every last dollar right down to the end, to that very last day. But we don't know. We got to make a couple of educated guesses. But there are some data that I looked at a number of years ago, and I found it quite interesting. And the data was this: 97% of Americans do not maximize their Social Security benefit. 97% of Americans do not maximize their Social Security check. That was pretty staggering, isn't it? Like, that was, I thought it'd be high, but I didn't think it was gonna be at 97% when I was going through some of this these slides a few years back. And so I started thinking about, why is that? Why would we not want to get the biggest possible check we could out of Social Security? Because we've been paying our entire lives. Why would we not want to just maximize the check, right? So I came up with 3 reasons. The first one is you retire early. Whether it's health issues, job downsizing, whatever it is, you retire earlier than expected. The expenses are still there, and we need to have some sort of income coming in to cover them, right? That one I fully get and fully understand. So sometimes we do need to turn on Social Security earlier than we anticipate, just because of circumstances that we didn't expect, right? So that one I get and fully understand. The second reason I came up with is you might be like my dad. You don't trust the government. You're not sure how long you're going to live. And you say, give me my money now while I'm able-bodied and I'm going to spend it. Like in the go-go years of retirement, right? We talk about the go-go, the slow-go, and then the no-go years. So he's like, if I'm in my go-go years, give me that extra cash. So that way I can go have some fun. I'm like, Dad, I hear it. I get you. But like, your mom lived to age 91. We have to at least look at some of these other options that are out there, because with life expectancy in the family, it's like, humor me and at least look at taking it at full retirement age, if not waiting till age 70. So I mean, that one I kind of get to a point a little bit, because it is your money. You can spend it how you want it. But like, if we're really trying to drive up that benefit to take pressure off the rest of your assets, we might want to wait till full retirement age or even age later to take it, because it just takes so much pressure off. you know, the life expectancy thing is a big part of this. And I got some slides here in a second that we'll show you. But I think the third reason, I think more Americans, more retirees fall into the third category that I thought of, which is we're just not aware of all the different strategies that are out there as it relates to Social Security, right? So trivia question. If you are a married 62-year-old couple, how many different filing strategies are there for you if you are a married 62-year-old couple? Throw out some guesses. Now that it's golf season, I've been giving these out in the wintertime too. Makes a little bit more sense right now. Sleeve of golf balls. Whoever gets closest gets the sleeve. So start throwing out some guesses. How many different ways can you take Social Security if you're a married 62 or a couple? 550? 3? 72? 7? How many different ways? 81. 81. Yeah, so this is, well, just wait. Actually, this is the next part of this is right now there's 81 different ways. You rewind back to, was it 2016? We made those changes? Blanking on my years right now. I think it was 2016 we made those Social Security changes. Prior to 2016, there's 567. You would have been the closest thing I've ever heard. 567 different ways that you can take Social Security. So the good thing is we're going to go through all 81 today, though, in the next 3 hours. Just kidding. It's ludicrous to go through all the different ways. Like there's just way too many options that are out there to try and, you know, figure out which one is going to be the absolute best. So we do need to make a couple educated guesses. We need to have a couple of plan A, plan B, plan C maybe to see what is going to get the biggest bang for our buck or be the best for our retirement portfolio, right? We can look at a few different things. Guy.
One thing just for the people online, if you have a question, you can text it to our number, which is 515-327-1020, or you can email Caleb Pearson at caleb.pearson@compassiowa.com. Thanks.
And if you have any questions here in the room, just raise your hand. We'll tackle them as we go versus wait till the end too. I mean, I will hold some time at the end for questions, but if you have something, just bring it up because somebody else is probably thinking about it too. So as it relates to Social Security, right? Longevity is a big part of it, but I mean, there's just a lot that goes into the planning part of it is, and what I look at this presentation from a standpoint of is how do I maximize my check out of Social Security? All right. So take everything I say with a grain of salt today a little bit, because everybody's individual circumstance is a little bit different in the room, right? So we have to think about longevity. We have to think about health concerns. We have to think about portfolio concerns and things like that, what the market is doing. So today's presentation, a lot of the numbers really focus on how can I get the biggest possible check out of the system to take pressure off the rest of my assets. But we do need to think about everybody's individual circumstance and maybe tailor the strategy just a little bit differently for your individual situation. All right. So the big question I always get is Social Security going to be there? Well, based on Ida Mae Fuller, I mean, that's why this system is in jeopardy right now, is because of her, right? But what ended up happening is life expectancy is a big part of it. So back in the 30s, Social Security thought life expectancies were about age 65. Well, now in the full retirement age of 65, well, fast forward, 70 years, full retirement age is now 67 only. So we've only increased that full retirement age by 2 years, but life expectancies are in the mid 80s. So we're having to pay all benefits for a much longer period of time, which is putting a lot of strain on the system. And right now it's expected by the year 2034, actually the last data I saw was like 2032, 2033, is that we have enough revenue coming into the system to cover about 3/4 of the expected benefits. So if we don't make any changes in the next decade, it's going to be about an immediate 20% reduction in benefits to retirees, is basically what that kind of means. So something needs to change along the way to make sure that this stays solvent for generations to come. And it's not just one thing that's going to be the fix for this, right? It might be raising full retirement age. It might be increasing, the wage base, increasing taxes just a little bit. There's a number of levers that need to be pulled to make sure that this stays solvent. And they are going to make some changes at some point. At least I hope they do, right? They need to, because otherwise we're going to run out of money. So just for the people that are retiring, here in the next few years, I don't expect too much change, if at all. But if we're looking out a decade plus, I mean, yes, we should think about Social Security being there. but to what extent? Do you want to think about it from a, 75% of expected benefits? Do I want to think about 100% of the benefits I'm going to get? So there's going to need to be some changes to make sure that stays solvent. All right, I encourage everybody to go out to ssa.gov. You don't have to write down this entire URL that's on the screen, just ssa.gov. ssa.gov. And I tell people to do this because I want you to go out there, create an account, and look at your earnings history. Because when you file your taxes every single year, they report what your earnings were last year on the Social Security website. And I just have you double check that the income that you made last year is showing up appropriately. Because I had somebody in one of these sessions one time say they missed a digit. So if they made 100 grand, on the website, it showed 10 grand. They made 50, they made 5. So they missed a digit. And that throws off the calculation, which I'll get to in a second. So just get out there and just double check to make sure that it's being reported correctly. And bottom line is you need about 10 years of work to be fully qualified for Social Security. They call it 40 credits is what you're earning, but basically about 10 years of earnings history, and then you're fully qualified for Social Security. But what they look at is the benefit at your full retirement age, or Social Security also calls it your PIA, which is your primary insurance amount. And basically what they do is they take a look at your 35 highest earning years of employment, and they index it for inflation. So it's not like consecutive 35 years. If you had a gap in the middle for whatever reason, that's okay if you had some other years to throw into the mix. So they take a look at your 35 highest earning years of employment index for inflation, and they spit out this benefit, which is your benefit at your full retirement age. So when you get your statement in the mail or you check online and they show your FRA benefit or your PIA amount at full retirement age, that's going to be based on that calculation. That's why I tell you to double check it to make sure that it's right, because it could throw the numbers off, quite a bit. All right. Oops, I went too far. So we'll go like this. Notes. All right. So now let's say I'm, actually, let's do this. In front of you, you got these laminated cards, right? If you're online, we're going to send you PDFs of all the material that we're going through right now. So we will give you these PDFs, okay? But now to determine what your benefit is at full retirement age, it's all based on the year of your birth. So if I'm born in 54, what is my full retirement age? 66. 66, perfect, thank you. So now if my full retirement age is 66 and my benefit says it's $1,000 at full retirement age, let's say it's $1,000, right? So if I wait till 66, oops, I already screwed this up. If I wait till 66, I'm going to get $1,000. Okay. Now I can take Social Security as early as age 62. So on our little laminated chart here, to the right of this, it shows what my percentage reduction is. So if I want to take it early at age 62, how much is my benefit reduced? 25%. $750. So because they're having to pay me out over a longer period of time, they are going to reduce my benefit permanently. Okay? And it's not like it's an either or thing. You could do it a couple months later, a year later, 2 years later, 3 years later, and it keeps on ratcheting up closer to that $1,000 as you get closer to that age 66. Now, once you hit age 66, that's kind of like the magical age, which I'll get to. There's a lot of things that start happening at age 66 for you, things that you don't have to worry about, I guess I'll say. But once you hit age 66, you can actually do a file and suspend method at that point in time and defer your benefit. And every year that you wait past your full retirement age, your benefit is going to increase by at least 8%. That's kind of key, at least 8%. So if I wait till age 70, my benefit will be $1,320. Just 8 times 4 gets me to $1,320. So they're rewarding me for waiting till later in life to turn on Social Security, so I get a bigger check. The reason why I say it's at least is there also is a cost of living adjustment associated with that too. So if Social Security says there's a 5% cost of living adjustment, I get my 8% plus my 5, I essentially got 13% deferral that year by waiting. Make sense? So that's every single year that you wait, you get the 8% deferral credit at least, plus whatever the cost of living adjustment has been, in those last couple of years. So if you kind of want to see what the cost of living adjustment has been out of Social Security, again, on our laminated card, which you'll get, if you're online, you'll get as a PDF as a follow-up. On the far right-hand side, it shows you what the cost of living adjustment has been from Social Security the last, I think it goes back 10 years now? 10 years it goes back. All right. So now let's jump back over to this slide real quick here. We're going to skip that. Hopefully I didn't hit the button too many times, and I did. There we go. All right, so the next slide that we're going to look at here is, when to start benefits. So this is kind of the magic numbers here. And again, this is the educated guess part. But basically what it looks at is different ages at which you turn on Social Security. So if we turned income on at age 62, if we turned income on at 70 and everything in between there, and then it basically shows you to the right, what is your cumulative benefits out of Social Security if you live to those respective ages? So if I'm 62 and I live till 70, I get 134. If I live till 90, I get 470. If I wait till 70 and then get hit by a bus the next day, I didn't collect anything, obviously, but if I make it to age 90, 595. That's a lot of extra cash. An extra $130,000 over your lifetime, especially there's a 50-50 chance that one of the spouses right now actually makes it to age 92, 93 is what some of the data out there is showing. So that's an extra $130,000 for a single person that you wouldn't have to take out of your portfolio, right? Or that's extra money that you can go spend. So real quick funny story. So a couple of years ago, I was calling my dad, and it was in the middle of July. And I was like, Dad, what are you and Mom up to this weekend? And he goes, oh, we're going on a ski vacation. I'm like, what? It's July. He goes, oh, no, Ernie. No, this is a spending kids' inheritances trip. I'm like, oh God. So they were doing something where they were having lots of fun. So just imagine, thinking about driving up that Social Security benefit. So if you had an extra 100 grand as a single person or 200 grand as a married couple, what could that do from just a planning purposes? Going ahead of fun, doing more things with the grandkids if you wanted to, take more travel, or more inheritance to the kids. I mean, there's a number of different things. Everybody's gonna do it a little differently, but it takes so much pressure off the rest of the assets if we're able to get that income, especially if you have that longevity in the family. But what's interesting is if you start looking at the numbers, look right there in the middle. Pretty much all those numbers, doesn't matter whether you take it to 62, 66, or 70, all those numbers are within $15,000 of each other. So if there's anything to kind of like the educated guess part, again, maximizing the benefit, if you think you can make it to at least age 80 and beyond, it's more beneficial to for sure wait till full retirement age to draw Social Security, or 2, wait till age 70 to really drive up that benefit. But then we need to look at planning purposes of how we're going to get, especially if you retire at 65 and you want to wait till 70, we just have to talk about how are we going to cover that gap for the next 5 years while we drive up that Social Security benefit. Like there's ways we can do it. We just have to have that discussion as going to be what's going to be most beneficial for you. All right, really quick on this. Kind of call this like the double whammy is if you take Social Security prior to your full retirement age, so full retirement age is 66, or I guess depending on the year of your birth, right? But we'll go 66 for our example today, is if you take it prior to full retirement age, there's a limit as to how much you can earn before they start clawing back your Social Security benefit. So that number that you can earn is $21,000. So that's your earnings limit. So if you take Social Security early at 62, the most that you can make is $21,000 before you have to start paying back your benefit. Once you reach your full retirement age, I shouldn't say the year, once you reach the year of your full retirement age, so if I turn my 66 in December of this year, from January 1st of this year until December, the earnings limit jumps up to 56 grand. And then it's reduced $1 for every $3 above that mark. And then once you hit that magic full retirement age, you can make as much as you want, and they're not going to claw back your benefit. Still got to pay taxes, but they're not going to claw it back. So I say this like it's a bad thing to make money prior to full retirement age and draw Social Security. It's not. You have to be aware of what the earnings limitations are, because if you make too much and you're collecting a benefit, you will actually have to pay back that benefit a year later. So what happens to some people, and again, I see a lot of this happen in some of these seminars, is that somebody raises their hand and says, you have to let them know ahead of time. So you can tell the Social Security office you're going to make more than that 21 grand, and they'll adjust your benefit on the front side. Because what this client did is they actually retired, previous employer dangled that carrot, they came back as a consultant, they had already turned on Social Security, they made too much money. The client had to write a check back to Social Security of like 15 grand that following year. Whew. So a lot of times when that money comes in, usually doesn't just hang out there in that checking account, right? Usually finds a way to go out and on something. So just be aware that if you are going to be mourning that mark, just let the office know ahead of time so that way they can adjust your benefit on the front side, so that way you have to write that check back. It's never fun writing it back. That's correct. That's correct. Yep. So here's the example. Annual Social Security benefit for Tamara was 20 grand. She started taking it at 62, so her benefit was going to be 14 grand. She made 40,000, so she's 62. Made 40 grand. The earnings limit was 21. So she made $18,000 too much, which means her benefit was reduced by 9 grand. Step out of the way. So her net benefit that she got after everything was all said and done was only 4,000 bucks. That's a big drop, right? Expecting 14,000 and only getting 4,000. And that's a big thing. So it's just, again, just an awareness thing to be aware. If you make more than that 21, you're gonna have to start paying it back. So adjust on the front side. All right, tax implications. My cheesy line here is just because the government's giving you money doesn't mean that they're not going to tax you on it too. And they come up with this number called your combined income, which is your adjusted gross income plus half your Social Security check plus your non-taxable interest to get to this combined income number. And then you put it in there to the slots. You're going to pop up. There we go. So to figure out where that combined income number is, so if you fall into this, should draw on the screen so everybody online can see us. So if you fall into that number of, let's say it's a $40,000 combined income number, up to 50% of your benefit is going to be included in your tax return. So the key point there is that is not the tax rate you pay. That is how much we put on our tax return that we file with our CPA every single year. And then you apply your tax rate to that. Does that make sense? Any questions on that at all? Okay. Spouse and survivor benefits. I'm going to come back over here because I don't like any of those slides. So this is one of the big topics that I've been spending a lot of time discussing with advisors and clients in the last few years, is this concept of protecting the surviving spouse and looking at it from an income planning standpoint for both a husband and a wife. Because again, if you take a look at some of the data right now, there's a 50-50 chance that if you're a married 65-year-old couple, there's a 50-50 chance that one of you is going to make it to age like 92, 93. So thinking about that from an income standpoint out of Social Security, this is a big, big topic to kind of at least, look at and talk about. So here's how the spousal benefits work. Let's use the example of my wife and I. So my wife stays at home with the kids for 95% of the day, and I'm out working. So when I'm out, well, don't get me wrong, she is working her tail off each and every day, chasing 3 little kids around, but she is automatically qualified for 50% of my benefit because we're married. So if my benefit is 1,000, automatically at her full retirement age, she's entitled to 500 bucks, no matter what, even if she doesn't work a day in her life at all, outside the home, right? She's automatically entitled to 500 bucks. But I have the keys to the castle. That 500 does not start for her until I turn on my benefit. So if I decide to wait till age 70 to take Social Security, she is not going to get her 500 until I start collecting a check. I hold the keys. Okay, that's one of the changes that they put into place back in 2016. So here's kind of where it comes. Actually, hold that thought. So now, if she does work outside the home and she has an earnings history with Social Security, she can play the game. Does she want to take half of my benefit, or is her own benefit a better thing to do? And we can run the numbers, do the math, and figure out whichever is going to be better. But she then has the option, if she worked outside the home and had an earnings history, to take 50% of mine or take 100% of her own. Okay. Next thing is, this is the protecting the surviving spouse thing now, is if I take Social Security at 62, I'm getting $750. If I pass away, the larger benefit stays. So if I take it at 62, my wife could then take her Social Security benefit too, and she would get 500 at 66. But if she takes it early, that would get reduced by up to 25%, depending on the year of your birth. So she would get 475, oops, not 475, 375. So then her 375 would go away, and she would step up to my, she would step up to my 750. So that 375 goes away, and she would step up to my 750, right? So this is where the protecting the surviving spouse concept comes up, is if I wait till age 70 to take Social Security now, her check, I guess whether she takes it at 375 or 500, doesn't matter. She would then step into my 1320. So which check do you want it to be there? Check do I want to be there if I pass away unexpectedly at an early age? So numbers wise, yeah, I probably should have taken my Social Security check early for my own income cumulatively coming out. But for protecting my wife, since she doesn't like to do the finances nearly as much as me because I'm in the business, if I can leave the largest check possible to my wife to make sure that that $1,300 is going to be there, that's double what it would have been if I took it at 62. That's a big deal. Yeah.
One comment that we get a lot of questions on is, let's assume the spouse is getting 500 and the primary spouse delayed till 70. So the household income, because both are getting it, is 1,820. You know what I mean?
Yep.
And then, but if the first spouse would pass away, then the household income would still go down, but not down as far. That's what you're saying. So the house,
Yeah.
if the first spouse passed away, the household income would go down to 1,320. So you're still seeing a reduction in benefits if somebody passes away. But the idea is to keep that reduction as little as possible.
And so, I mean, this is where the unfortunate thing is, like, educated guess, right? What do we want to plan for? What do we want to protect against? Because it might not make the most sense to do it this way from a number standpoint if we plug it into some software. But if one of those things for me in particular, like, I want to make sure that the biggest possible check comes to my wife every single month, so that way she doesn't have to worry about a thing. Like, one of my colleagues that I work with, he's 67 years old. He goes, I'm working till 70 and I'm deferring Social Security because his wife wants nothing to do with the finances whatsoever. Because he's in the business just like I am. So he's just like, I want the biggest possible check for my wife to make sure she doesn't have to worry about a thing when I'm gone, if that were to happen. He's like, I plan on living to 95 because my mom lived to 95, but just in case, this is why I'm doing it this way. So again, just a topic of discussion to think about. And that's where everybody's situation is just a little bit different. That's why I say take everything I say with a grain of salt, because everybody's going to have just a little bit of different things that we're going to plan and protect against, right? All right, let's jump back over here quick. Yeah. Yep. Nope. Yep. Absolutely. All right, so really quick on survivors is if you are a widow, excuse me, you can start Social Security benefits at as early as age 60. Okay, but then the same rules apply if you take it at 60 on your deceased spouse's benefit. Your benefits can get reduced up to 30% if you take it as early as age 62. And you can, again, play the game. Do I want to take my deceased spouse's benefit right now at 60 and then maybe flip over to my own benefit at a later point in time? And you can do I'll show you something in a second to make that decision easier, okay? Divorced spouse. A couple of the key points here is you need to be married at least 10 years. The ex-spouse receiving the benefits must be at least age 62. Your own work record is less than the benefit based on the divorce. And again, really simply put, lots of words there, is you can play the game. Do you want to look at taking 50% of your ex-spouse's benefit and then switching to your own? or maybe just taking 100% of your own is going to be a better thing. And we can look at the numbers. That's really what it comes down to. We just have to plug the numbers in and see what is going to be most optimal for you. But if you do have an ex-spouse, you might be able to qualify on their benefit if it's going to benefit you. If 50% of theirs is not, or excuse me, if 50% of theirs is greater than what 100% of yours is, then you'll probably want to take the 50% of what their benefit is.
Do they have to be
No, separate. Yeah, again, for that part, it's just separate then. So Medicare eligibility, Medicare slide, yep. So regardless of the retirement age, your benefits start at 65. And if you're if you're already receiving a Social Security check and you enroll in Medicare, your Medicare premiums just automatically start to getting deducted in there. Once you hit age 65 and you're not taking Social Security benefits, you have to enroll in Medicare. There's a 3-month window on either side. All right, you have to do it, otherwise there is a penalty. What I tell people is, if you're 65 years old and you're still working, check with your employer to see if they want you to stay on the health plan or if they want you to switch to Medicare. Most plans, I'll say, want you to stay with the employer plan and not switch to Medicare, but I've heard of a couple of random instances where the employer's plan wants you to switch over to Medicare. So just check with your plan once you hit age 65 to see if you want to stay or if you want to switch over to Medicare. And then there's basically 4 parts to Medicare. There's really 2 decisions. So part A is your hospital insurance, part B is your medical insurance, your outpatient stuff. C is your Advantage plan, and then D is your drug. So in other words, though, there's 2 decisions to make with Medicare. And what I recommend doing is, I'm going to do a very high level here. Compass does a Medicare seminar in the fall, October timeframe, roughly. Go to that one. They're going to get more in depth into Medicare when open enrollment happens. And you really want to spend some time on Medicare because it changes each and every year. And you have to re-enroll every single year. But basically the 2 areas or the 2 decisions to make is, which one's on my right-hand side or this side? The 2 decisions are original Medicare, or do I want to do the Advantage plan? This one over here is going to cost you more. And for the people that are online, I'm pointing to my left side or the left side of the screen, original Medicare. It's going to cost you more, but you know what you're going to pay every single year. Like your deductible lower, you have a better idea as to budget what your healthcare expenses are going to be. If you're a healthy 65-year-old person and you don't go to the doctor much, the Advantage plan might be a better option for you just because it's lower cost, but then when you go in, it's going to cost you more. So not as much costly on a year-to-year basis if you're healthy, but if you do get sick, you're going to end up paying a little bit more probably. So these are kind of the 2 decisions that you have to make as it relates to Medicare. And then you have the Medigap policy to fill in everything else in between. All right, so here's what I wanted to show you. You know, when we talk about the 567 different ways that you could take Social Security back in 2016 and now down to 81, there's still a lot of different options, right? And everybody's situation is a little different. And I was doing one of these seminars a few years back, and somebody in the back of the room had a legal pad, and he was just in the back just writing things down feverishly for like 20 minutes. And then he raised his hand. So what you're telling me is I need to live till this age for it to be worth it. I'm like, have you been spending the last 20 minutes doing calculations on a legal pad with your phone? He goes, yeah. I'm like, why don't you just go schedule some time with your advisor and we can figure out what's going to be best. So of course I had it all set up and ready to go. And let me log back in here in a second. Because there is software out there where we can plug in your individual situation, what your benefit is at full retirement age. Again, make an educated guess as to how long you're going to live. And then this software tells us the most optimum way to take Social Security based on our inputs. It's awesome. So I got this one that I just titled in their sample seminar case. And I have it built in here where I have birth year of 1958. Life expectancy is going out to 88 and 92. I put in here for this example, and I put a 2% cost of living adjustment from Social Security. So based on that, those inputs, there's an optimum strategy and a custom strategy. The optimum is in green. That's the top one. So basically the system says, based on these inputs and those life expectancies, it's going to be best if Jane takes her Social Security benefit at 66 and John waits till 70 to take Social Security. But then down below in blue, I have a custom scenario. So what if I said, you know what, forget that. We both want to take it at 65 because we're in the go-go years of retirement. I want more money right now. I can select that bottom one to age 65 and it updates the numbers and it will then show me what the crossover point is. So if you're looking online, I'll try and highlight it right there, about age 80. So you basically look at those two lines and say, when do they cross over? And about age 80, like we looked at the previous slide, that's about the crossover point where if you wait till age 66 and 70 for this example, your benefit is going to be $16,000 more cumulatively at that point in time. And then once you get to the bitter end, I mean, that's an extra $200,000 in extra benefits over your lifetime for a husband and wife scenario, in this example. So again, we just plug your numbers in and figure out what that crossover point is. And you kind of just ask yourself, am I going to make it longer than that age? And if you think the answer is yes, wait till full retirement age or longer to take Social Security. If it's less than that, take it earlier, right? So we can kind of play with the numbers to see, what's going to be best for our situation, at that point in time. Got a question?
Can I add a few things?
Absolutely.
So the first joke with Social Security planning is tell me when you're going to pass away and we can really nail this for you. In the absence of knowing that, and very few people do, in the absence of knowing that information, as planners, we view Social Security as a tool to make your plan work. Because we do not know how long you're going to be around. You do not know that. And some of these, this is just math up here. What you need to do is you need to take the math and apply it to the situation that you want to happen. So that's kind of the first thing. The second thing that I think is important to say is that all of these inputs are variable, which means you may actually stop working at 62. You don't have to take Social Security then. You can not work for a number of years and delay it. And a lot of this math still works. And typically, even if you're not earning any money anymore, active income wise, your benefit is still growing by a substantially similar amount. So it's, again, there's multiple factors that go into determining your Social Security benefit. Another strategy sometimes we talk about there's typically a higher earning spouse and a lower earning spouse of the two, right? And so we've talked a lot about protecting the benefit for the lower earning spouse. And there's actually sometimes it makes sense where the lower earning spouse files themselves because they're not working. They have built up some benefit of their own. They file themselves on their own earnings record. And the higher earning spouse, if they're of age, selects the spousal benefit. So the higher earning spouse is still working. They're past the full retirement age, and the lower earning spouse has theirs and a spousal benefit. So there's some income there in those intervening years. And then at some point you can switch, withdraw your spousal benefit and go on your own to do that protection that we're talking about. So again, a lot of different factors here, but I just want to remind us that we don't know how to get the top dollar out of Social Security because we don't know when we're going to pass away. That's the biggest key point I'd like to make.
Absolutely. And so what does make all of the planning process just a little bit easier, see, the earlier that you can do the planning, the better. That just makes life so much easier for everybody if we can do planning ahead of time, a couple of years. And the thing that makes it even easier, don't start throwing stuff at me right now, is there's this sheet on your table that is the retirement income planning worksheet. For lack of a better term, this just flat out stinks to fill out. This is not fun, right? Nobody ever likes doing a budgeting worksheet. But I'll tell you what, the clients that go through this exercise and actually spend the time and do it feel that much more confident, secure about going into retirement because they know where their income is coming from and what their expenses are, right? You don't have to get it down to the exact dollar and cent, just get it close, right? Just get it close for like the bigger ticket items that you come across. And when you go through this and you fill it out and put everything on there, like what we're trying to get to is like, if we fill this out and our expenses are $60,000 per year and our income coming in is 40, do we have a problem? Maybe. We might. We just have a $20,000 gap. We just got to figure out how we're going to solve for it. Right? That's kind of the fun of all this is like, there's multiple ways that we can solve for that $20,000. We just have to have a discussion and a plan as to what is going to be the most beneficial way to solve for that $20,000 gap. And if you know how you're going to solve for it 2-3 years before retirement, you know what? You might get to 2 years. You might think you're going to work 3 years, but you're like, you know what? After 2 years, I'm good. Like if you know exactly how you're going to solve for that and you can retire after 2 years instead of 3, maybe retire. Go have some fun. You've earned it, right? So spend some time to do this. Spend some time to do this because I do feel like it'll be worthwhile and helps your advisors out, significantly too from just the planning side of it, leading up to retirement too. All right, show of hands. Who learned something today? All right, awesome. Kurt, I see your hand up. Awesome, wonderful. All right, so thank you for coming out today. I greatly appreciate it. I'll answer any more questions that anybody has right now too. But last thing I'll throw out there is this is a giant spiral bound book for everybody online. You'll get a PDF copy of this too, and you can stop by Compass to get a hard copy if you'd like as well. But this spiral bound book, Allianz puts together, this is one of the best Social Security material that I have ever seen come out with on Social Security. It's all tabbed out on different things. So I think most of the ones on the table are going to be gone. There's probably about a half dozen, maybe a dozen in the back. So if you have a friend or colleague or family member that's going to be approaching Social Security, I recommend grabbing one of them and handing it to one of your friend, colleague, coworker, because this is just awesome stuff on Social Security. And if you have any questions, I can take them now too.
We got a question back here.
I have a couple of questions that the clients asked me to ask and pass along to them. So Ernie, earlier you spoke about if you're still working and you start taking Social Security, you can only make so much money in a year. Now, when do they start that, counting that? Is it only money you're going to earn after you've started your benefit, or is it for the whole year in which you began your benefit?
So they'll take a look at when you start taking your Social Security check from that point on then.
Okay, thank you. Second question, scenario where we have spouses and we have the higher earning spouse intentionally waiting till 70 so they can maximize their benefit. Only something unexpected happens, that higher earning individual dies before reaching 70, before claiming and starting their benefit. So what is their surviving spouse's entitlement? Is their spouse entitled to to whatever the deceased's benefit would have been had they already claimed it, or are they limited to half of
So if
that
they,
full retirement age benefit?
so let's say they waited till 60, or they're 68 years old, they waited 2 years and they pass away, the spouse will get stepped up to 68. So whatever those deferral credits would be, 16% plus cost of living adjustment, that's what they would get stepped up to.
Okay,
at that point.
they're not limited
No.
to half.
Nope,
Okay, very good. Thank you.
you bet.
Oh, hold on. Let's get.
It's not a, it's a note. The caveat is that as long as you don't remarry.
Prior to age 60. Once you reach age 60 and remarry, then you can do whatever you want at that point in time.
Say that again.
So if you, let's say you're a widower and I guess differences based on widow or divorced, right? You can get married and divorced, married and divorced, married and divorced like 10 times, or I guess 3 different times over 3 decades. You could have 3 different benefits that you could kind of basically qualify for, right? If you wanted to do it that way, have at. So then the other part of that is if you're a widow though, if you marry prior to age 60, you can no longer qualify on your deceased spouse's benefit. If you remarry after age 60, then you're fine, then you're okay. Yeah, if you, yeah. A few jokes I could say there, but I'll refrain. Any other questions at all?
Based on full year.
Everything based on full year?
So, yeah.
The question is everything based on full year? There we go.
So if you take your Social Security at 66 you qualify at 66 years, you take it at 66 and a half. So do you
Oh.
get your whatever you did at
Cruise, I think it's-
66?
It's not by
Or-
the day, it's by the month that it accrues. So like that, every year that it gets a little bit higher, there's a percentage increase every month that you wait, your benefit gets just a little bit higher each and every month that you, whatever the percentage ends up being.
All right, we got another one here.
If at full retirement age, you begin taking the benefit of social security, but you
Yep.
still work, will that benefit ever increase because you're still contributing for those?
Technically, it could, yes. Yep. They'll kind of readjust it every single year and it could technically readjust. Good questions. Love it. Any others? Going once. Going
All right.
twice. Awesome. Well, thanks for coming out today. Really appreciate it. Like I said, there's more packets in the back to hand out to friends and family and colleagues if you want.
Ernie, thank you very much. Thank you all for coming today. A very heartfelt thanks for your business. It is for you that we exist. We are still open for business and taking new customers. So pass along our names, this information. If someone comes to you and say, hey, I need some help with stuff. So thank you. Enjoy the weather out. Spring is here. Go Hawks, clones, all that stuff. Have a great one. Thanks for coming.